Morning, everyone, and welcome to the weekend update here on Saturday, July 22nd. So we did continue a very minor uptick in our equity curve. We were able to close out a trade that I didn't think we were going to be able to close profitably, but we did end up being able to close that out profitably, and we'll take a look at that in a minute and kind of walk through that trade. So overall, our uptrend is still intact, but of course, in the huge run-up our market has had in recent times, that puts stress on delta neutral trades, and volatility being much lower, the trades that are offered up to us don't have quite as good of a reward to risk ratio, and therefore we scale back. I've talked about this multiple times over the past probably 3 weeks, that we need to kind of reset our expectations. And quite frankly, this is part of learning effective delta neutral trading. One of the things that I suffered from as I was going through my learning curve was I was following I guess an alert service that put out alerts, and I found out that one of the founders that's putting out alerts was not making any trades. And it's like, well, why, if you're not trading because you don't consider the market conditions right, why are you continuing to send trades out to us? And he says, well, you're paying for alerts. I want to give you alerts. But yet, personally, he didn't like the reward to risk, so he was not trading. That was kind of an aha moment for me, and I said, if I ever do an alert service, I'm not going to go there. I might still do trades, but I'll let people know that, hey, reward to risk isn't as good. We're going to scale back, etc. Because here I am trading full size, trying to march through this and getting hammered in the process. So anyhow, just rest assured that if I don't feel it's viable to make certain trades, I'm just going to simply say it's not viable to make certain trades. I don't need the money from subscriptions that bad. I do this for fun. I don't do it for a living. So anyhow, all that said, equity curve is still intact, but if we do look at our current open trades, we have some that are being stressed a little bit, but even though they've been stressed a little bit because of the moves we've recently had, overall, I like the positions. I like where these positions are positioned at this point. So if we look at these, I think I need to wait a second here. It is a Saturday morning. I need to wait a second for these curves to refresh, or maybe I'll hit my refresh button here because things, of course, tend to get a little wonky after hours or when the markets are closed. And so basically, these are our positions. This one, of course, is the Google wheel. This is not a short-term trade. This is going to be an ongoing thing where we're going to go through the process of the wheel, and we're going to see if we get assigned. And if we get assigned, we're going to sell covered calls on that. So this one does not have a date associated with it. And I would urge people to consider paper trading this to get an idea of what that process looks like. Of course, this is a heavily positive delta trade. I mean, this is a very bullish or neutral to bullish trade. This is not a neutral trade. I want to be clear on that. Most of the rest of the trades we try to do are more neutral in nature. So this particular one, this curve isn't exactly showing up right. Actually, there's more tent above here. Let me see if I open it up in the, there we go. So, I like where we're positioned here. We've got a nice wide range. We've got some decay that's going to start marching in here, in the next week or two. The market can gyrate around on us, and again, we've got some range, if you will, on this trade. So that's certainly a good place to be in, and I don't anticipate probably doing much with this throughout this week. Actually, I'm thinking there's going to be a lot of movement in the market this week, probably because we've got a Fed announcement, we've got massive earnings reports, etc. I'm not going to try to trade too much this week. We'll just let the trades that we have kind of do their thing, decay a little bit, because we do have 4 of these open, and we usually have 4 to 5 open. This one, again, I like the position on it. As this decays in the calendar here, that's probably where we're going to get some money out of this. If the market pulls back, it will be our butterfly that will actually end up being profitable for us. And this particular trade here might not be profitable, but hopefully the butterfly would be profitable enough, or more profitable, to where it would certainly cover any loss we might have incurred on this one. I'm going to come back to this one in just a second. So this trade down here, again, I really like where this is positioned as well. Decaying very nicely. It's going to decay. This one does expire next Friday. So this one's going to start to decay pretty rapidly. This will be one that will probably look to start thinning out through the week this week. Again, my goal is going to be to not post anything until that last 90 minutes of the day. I'm trying to kind of stick to that so everybody can expect that. In some cases, I may put out a GTC order in that last 90 minutes with the expectation that it might hit the following morning to thin some of these trades out. So again, not much I'm going to do with this one other than work to thin it out throughout the week. And then this one, I feel like this one is going to be fine if it doesn't start to sell off too hard, too fast. I mean, in retrospect, obviously we would have been better off had we not adjusted this particular trade. But as trading goes, I mean, sometimes that's almost, you feel like that's what you need to do in order to get the market to go against you. And so the fact that this pulled back actually helped the one position that we were able to close that I previously had shown here. And again, I'm going to walk through that trade yet as well. So what we may need to do on this, if the market continues to move down here at all, a couple possibilities might be to calendarize out some of these lower positions, these lower longs, calendarize those out a little bit, which will lay this a little more open. That might be one possibility. Another possibility, the most likely possibility or the easiest possibility, is really just to roll back in some of these particular strikes. Let's see here. Actually, I forget this one is not a... this is an iron condor, so we got to treat this one a little bit differently. We'd actually roll these guys down a little bit. So something along those lines, that's probably a little dramatic, but something that would essentially flatten out the risk in this trade or make it a little more delta neutral. So it's conceivable that we may make a move like this if the market were to continue down. So that would be a possibility here. Now, what I do want to do, now that we've kind of walked through those open positions, I do want to go back to the one that we closed, and I kind of want to walk through the progression of that for everyone, because that was a pretty complex trade and got a little wonky at places. So let me just give me a second. I'm going to pause here. Okay, so here we go. This is that trade that we just closed, and again, we did end up squeaking a small profit out of it. But let's walk through this, because this was pretty crazy. So back on July 6th, we were looking at opening a simple calendar like this, and we did go ahead and open that calendar. Now the market was trading at 45.15 at the time. So we get that calendar open, then we get to the 13th. Our market had ran up to 45.04. So again, we were at, I think it was 44.15, somewhere back in here. So we're up almost 100 points. So a couple possibilities. We could have taken this tent totally off and moved it higher, or if our expectation is that the market is likely hitting some resistance area and might pull back a little bit, a logical thing to do would be to do a diagonal. So that's what we added here, was a diagonal, which skewed us a little bit to the downside. In retrospect, we may have been better off doing another flat calendar here, or just an actual calendar as opposed to a diagonal. But diagonal is what I went with because of my predisposition that the market was already overextended at that point. So sat there, decayed a little while. Then on the 17th, I ended up pulling this lower tent off totally, and ending up in this position, which is still a skewed position, a fairly negative delta position. Now, the reason for doing this is because that lower tent had essentially become a drag on the position at that point. It did have a little bit of profit in it, but it wasn't going to decay very rapidly, being outside of the range as far as it was. So if we can get rid of that at a little bit of a profit and then let our decay happen faster here, it doesn't act as that drag. And then our market continued up. So we were at 4,500 before, now we're all the way up at 4,560. So then I took this and I actually diagonalized it in the opposite direction. So at this point, basically, we had a breakout. I became more convinced that, this market is going higher no matter what I think, and that we would be safer in the position. It neutralized our delta. It took us from a negative 10 delta to pretty much neutral delta by diagonalizing that in the opposite direction. Then at that point, we just kind of let it decay in that area, and over the next 2 days, peeled off parts of that. And, it was fortunate that our markets did pull back. Again, my expectation was that we were going to get some level of pullback. I was sort of anticipating that or expecting that, given how hard our markets had run. And they did, in fact, pull back on Friday, allowing this position to be closed for a relatively small profit. But again, when we look at the number of adjustments in that particular trade, 1, 2, 3, 4, 5 adjustments, and then, of course, the opening. Normally, I try to get through delta neutral trades with 0 adjustments. About 60% of the time, I find I don't have to do any adjustments at all. Maybe 20-25% of the time, we end up with 1 adjustment. Rare occasions, 2 adjustments. But, this was chasing our tail here. And, a case could have been made that we should have pulled the plug on this trade earlier and not tried to fight it. I do not like fighting these to expiration, as you know. However, once we got in a position where we had a fairly sizable loss on this a few days ago, it was kind of like, at that point, the reward to risk was in our favor because we weren't going to lose too much more by leaving the trade open. And if the market pulled back, we had a fair amount that we could gain. So that was the reason for actually leaving this open as we went into expiration. So I did just want to walk through that and again let everybody kind of see how crazy that thing went through the process. And again, this is a very, very active trade. This is not the type of trade that we would normally run into. But again, we also had a market here that marched from, during the course of this trade, from about 43.90 and all the way up to 45, almost 45.90. So almost a 300-point move during the duration of that trade. So anyhow, that's sometimes what you got to do. And again, when that happens, you have to lower your expectations as well. So looking at our markets kind of going into next week, again, a lot of activity next week with earnings reports and some Fed news. I believe it's on Tuesday or Wednesday. So it will be a fairly busy week. My expectations of the market are going to be a likely pullback here into this 4,500 range. That would make sense, again, barring any erratic news. Under normal circumstances, pull back into this 4,500 range, maybe chop sideways a little bit to where this trend line comes up and meets our sideways chop, and then probably a continuation of the up move. If there's some larger negative news, I could certainly see a pullback down here to the 4450, 4500 range. That would be certainly within the range of expectation as well. And of course, getting all the way up here to 4,600 is not out of the question either if there's some strong earnings news that comes out. So those are kind of my general expectations. I would say a chop between 46 and a quarter, probably down to 44 and a half, 45, somewhere in that general range. So for the next week or so, that's kind of where I would expect our markets to be. And again, our current open trades largely line up very well with that expectation. So I guess that's it for the weekend update here for Saturday, July 22nd, 2023. Take care, everyone.